Hey everybody, welcome to your weekend review for the week of Monday, May 1st, 2023. And oh, what a week it was. It's the start of Fed week. MBS were down 23 basis points earlier today. Stocks were flat. The big news just before opening this morning was that JP Morgan Chase had agreed to purchase First Republic Bank's assets and assume its deposits. Because this helped alleviate the risk in the banking sector, it was a negative for the bond market. Traders may also be assuming that this means that the supply environment will remain elevated, as JP Morgan could look for opportunities to sell some of the bonds it acquired on the cheap. This week, all eyes will be on the Fed and the economic data on the docket. The job starts with ADP on Wednesday, followed by non-farm payrolls on Friday. The labor market will be a focus that is generally strong during rate raises, but we did see signs of cooling in March, slight signs. The FOMC rate decision and press conference are on Wednesday, and it's expected to raise 0.25, and the markets will be monitoring the minutes and the press conference guidance on the path forward after that. Today, we also got ISM manufacturing PMI data came in strong at 47.1 on a 46.8 forecast. I can't spell it there. The U.S. manufacturing economy improved in April, according to the ISM manufacturing survey. Demand eased again, with new orders index contracting to a slower rate. New export orders index slightly below 50%, but improving. Customers' inventory index entering the low end of too high territory, still pretty high, but coming down a little bit. A negative for future production, and the backlog of orders index continuing in strong contraction. Output consumption measured by the production and employment indexes was positive, with a combined 4.4% percentage point upward impact on the manufacturing PMI. At the end of the day, we were down 31 basis points. We got a whole bunch of reprices all over the place. Ended up at 100.45 on the UMBS 5.5. Stocks were basically flat, down a point, and the U.S. Treasury was up 14 basis points, which is a lot. So at 100.45, that puts us right above that black trend line right there, which is the 50-day moving average. So it's a pretty narrow range with 4 ceilings on it. So a lot of constraints on the top side, but a lot of room to fall on the bottom. In more news, yes, the U.S. MBS index lost a bit more ground in April, with an excess return to treasuries coming in at minus 0.1%. But considering the performance volatility we've seen highlighted over the last year, at least it's a nice normal return number. Over the last 16 months, which is basically since the end of 2021, this is only the 6th month where the performance did not fall into the top 2 best or worst performances in history for that month. So there's been a ton of volatility. So taking some of the volatility out of the market is pretty good. We also got an update from four different federal agencies on Tuesday. Acknowledged the growth of artificial intelligence-powered automated systems, but reiterated that the use of artificial intelligence is not an excuse to ignore or break the law. So basically, ChatGPT said so is not a defense in court.